Welcome to my channel. I'm Scott, and in this video I am going to walk you through the process of valuing Voyager digital stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Voyager is a crypto asset broker. It allows its customers to buy and sell crypto assets. It offers order execution, market data, wallets, and custody services. The company surpassed 1 million customer funded accounts as of 12/31/21. That is up from just 43,000 on 12/31/20. The company plans to expand into NFTs and the metaverse. Voyager is headquartered in New York, and was founded in 2019. The ticker trades on the TSX, OTC, and Deutsche Börse. We're going to look at the ticker that trades in the United States on the OTC market. The ticker is VYGVF. They also trade on the TSX, ticker VOYG. Let's get started with the model. This is a small cap company, 820 million market cap. They're trading at $4.82 a share, and they have 170 million shares outstanding. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. They did have negative free cash flow in 2019 and 2020. Then it jumped to 217 million in 2021. It dropped to 41 million in the trailing 12 months. Net income is the profit or loss on the income statement. It's revenue minus expenses, and that's negative every year. Revenue is the sales for the company, and they had pretty much no revenue in 2019 and 2020. Then it blew up in 2021 to 175 million. And then it more than doubled from that point to 416 million. This is the company's income statement. The top line is the revenue, the sales. Below that is their operating expenses. These are all the expenses to run their day-to-day business. Revenue minus operating expenses gives you your operating income, and that was positive in 2021 for the first time. It's also positive in the trailing 12 months, but is lower than 2020. So it looks like they're trying to grow and invest back into their business. They have a lot in other income and expenses. These are all the gains or losses not part of the company's core operations. We'll look at this in a little more detail when we look at their financials. This is from Yahoo Finance. Then you have your pre-tax income, then your taxes, and the bottom line of the income statement is your net income, which is negative every year. Their quarterly revenue was only $282,000 in the third quarter of 2020, and it's grown every single quarter. It really took off from this point, 3.6 million, way up to 60 million. It went up to 109 million. It actually dropped to 82 million, but then it more than doubled to 165 million. They did have positive net income in the most recent quarter, 2.6 million. Also 2 quarters ago, they also had positive net income of 30 million. They don't have a traditional income statement in their latest quarterly reporting. So I'll just pull up all the screenshots from their most recent report, which gives all the information in the income statement. Their revenue for the 3 months ending 12/31/21 was 165 million. In the same period in 2021, it was only 3.6 million. Transaction revenue is their biggest at 87 million. Then merchant services, 16 million. Fees from crypto assets loan, 36 million, and staking revenue, 21 million. The majority of their revenue is from their customers buying crypto, selling crypto, or converting crypto on their platform. The way a bank traditionally makes money is it receives cash from people putting money into their checking and savings account, then uses that cash to lend out, to loan to others, and charge a higher rate than they're paying on the person who's putting money into their account. Part of the way this company makes money is loaning crypto out to others. This company does not own crypto, it's loaning your crypto out to others. If you go to the supermarket and use your credit card to pay for your groceries, the credit card company takes a 2 or 3% fee. That's merchant services. This company receives merchant fees on the cryptocurrency transactions. They also generate revenue from staking. The way I think of staking is similar to earning interest on the cash in your bank account. Investors lock up their cryptocurrency on the blockchain in exchange for rewards. It's usually for more cryptocurrency coins. Another way to say it is staking means that you make your crypto available via an exchange using the proof of stake process. It allows you to monetize your crypto holdings rather than just sitting in a wallet earning nothing. They also received $5.5 million from other revenue. They received 40 million VGX tokens. VGX is the Voyager Ethereum token. The token is used to reward people that uses the Voyager centralized exchange. Here's a breakdown of their expenses in the fourth quarter of 2021. 73 million of rewards to customers, 35 million in marketing, 15.5 million in merchant services, 4 million of stock-based compensation, another 9 million of employee compensation, and then a few other various expenses. So their total expenses were 162 million. They're always going to have a lot in other income and expenses because each quarter they have to mark to market their cryptocurrency assets. Most of the cryptocurrency on their balance sheet is held for their customers. The mark-to-market change was only 1 million in the fourth quarter. This is the company's statement of cash flows. The top line is operating cash flow. That's how much cash the company generates or loses from its operational business. So they are generating positive operating cash flow. It was a lot in 2021, 217 million. It's 41 million in the trailing 12 months. And they have pretty much no CapEx expenditures, very little. 34,000 in 2019, 4,000 in 2020, and none in 2021. And in order to fund their growth, they're doing it mainly with stock. They issued 136 million in 2021, 210 million in the trailing 12 months. And they don't have any debt anymore. They paid down all their debt. Let's look at the capital structure. 314 million of equity, no debt. So they're 100% equity. And it looks like they have 143 million of cash on their balance sheet. This blue line is their equity balance since 2018. The green line is their cash balance and the red is their debt balance. So they got rid of all their debt and they have a good amount of cash on their balance sheet. And their equity grew a ton in 2021, so everything looks like it's going as planned. I gave them the highest whack on Finbox, 9.5%, and that's a discount rate we're going to apply to the future cash flows. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's 1.8 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $1.5 billion. We divide that by 170 million shares. And we get a calculated stock price of $8.73. They're trading at $4.82, so they're trading at a 45% discount. It's a buy according to the model. Their revenue in 2024 is projected to be 934 million. So I grew their revenue 31% a year to get to that 934 million, then grew it another 31% into 2025. That's how I got their future revenue estimates. In the trailing 12 months, they converted 10% of their revenue into free cash flow. So I multiplied their future revenue estimates by 10%. That's how I got their future free cash flows. The website Simply Wall Street values the company at $60. They're saying it's 92% undervalued. 4 analysts priced this stock and the average price target is $18. The lowest 12, the highest 22. So it looks like everybody's saying this stock is undervalued. This is a stock price since it started trading. So it started out about $25 a share. Then it just pretty much went straight down up until November 2021. Then it jumped back up to $20, and then it's only gone downhill from that point. Since the stock started trading, it's down 79%. In that same time, the S&P 500 is up 10%. They have a crazy high beta, 3.37, so the stock moves more than 3 times the market. It's really volatile. It's gone down 82% in the past 52 weeks, while the S&P is up 9%. The 52-week low is $5, the high is $29, and the stock is trading well below its 50-day and 200-day moving average. About 1 million shares are traded each day on this stock. Of the 170 million shares outstanding, 63 million are on float and 7.5% of the shares are held by institutions. They don't employ many people, but their employee count has been going up a little bit the past year. They currently have 250 people. If you invested $10,000 into this company when they started trading, you'd be at $1,700 today. That's an 83% loss. In the past year, there's been lots of insider buying and selling. 16,000 shares have been sold, and about 80,000 shares have been purchased. Here's a list of all the insider buying and selling, the date, the person, the number of shares, and the price. So I'm sure the 2 people who sold are pretty happy because the stock price has come down, so they could buy back at a lower price. 91% of the company's shares are held by the general public, 6% by institutions, 2.3% by private companies, and only 0.6% of the shares are held by individual insiders. The biggest shareholder is SJE Consulting at 2.3%, Amplify Investments at 1.76%, Columbia Management at 1.64%, Jacob Asset Management 0.68%, and I have heard of Murray Asset Global before, that's 0.5%. Let's look at their financial ratios. We can't look at the PE since they have negative net income. They do have a good price to sales ratio of 2.0, that's stock price of sales per share. Their price to book is also pretty good at 2.6, that's stock price over book value per share. Their price to free cash flow is 20.1, that's stock price over free cash flow per share. Here's a list of their assets and liabilities. They hold $3 billion of crypto. They loan out $2.7 billion. And you could see pretty much all that crypto is held for their customers, $5.7 billion. 26% of the crypto they hold is Bitcoin, 31,381 coins, valued at $1.45 billion. The next largest is Ethereum at 16%. The US dollar coin, which is pegged to the US dollar, they have 10% of that. VGX is their Voyager coin, that's 8%. So if the prices of cryptocurrency goes up or down, it should not affect this company that much because they make their money on fees. They don't actually hold crypto. The best way to look at ratios to compare them to companies in the same industry, there are 251 companies in the same industry as Voyager, and Voyager ranks 149th in market cap. It's hard to compare their ratios since they're such a small company. But they do have a better price to book, price to free cash flow, and price to sales than the average company in their industry. Of course, if you look at the numbers on a nominal basis, it's going to be a lot worse than average. Their free cash flow, market cap revenue, of course, is a lot lower than the average. So to summarize, I have them trading at a 45% discount, but it's really impressive how much this company has grown. So if you like Coinbase, but you feel the valuation is too high, this may be a better option. There could be a ton of upside with this company's stock. I may invest a little myself. I rank their free cash flow as 5 out of 10, their revenue 8 out of 10, and their ratio is 5 out of 10. So let me know what you think. Give this video a like, subscribe, or comment below. Also, if you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.